You know how some stocks look quiet for a while, and then out of nowhere they just explode? Well, Opendoor might be setting up for that kind of move right now. Something is brewing behind the scenes, and this upcoming week could decide where this stock goes next. I'm talking potential catalysts, rate cuts, technical breakouts, and maybe even a shift in how investors see Opendoor altogether. So before you scroll away, stick around, because by the end of this video, you'll know exactly what levels to watch, what could move the stock, and how this could play out for real investors, not hype. If you enjoy no BS stock analysis that actually makes sense, make sure to hit that like button. Now let's get into it. This week, the broader market's a bit slow. Not much new data is coming out because of the government shutdown, which means we're mostly looking at a technical market. The Fed will take center stage with several speakers lined up, including Jerome Powell on Thursday morning. And of course, the FOMC minutes drop on Wednesday around 2 o'clock. Normally those minutes shake things up, but lately they've barely moved markets. So unless Powell says something unexpected, it's going to be a week driven mostly by price action and sentiment, not headlines. Now let's shift to Opendoor. No huge company announcements this week, but over the weekend, Kaz, one of the team's key players, posted about an update on their website. It's a small thing, but it shows progress, and progress always matters. Still, that alone isn't a reason to rush and buy in, but it does show that optimism is building. And when you look online, you see a lot of people talking about how this stock could eventually push toward $50. Now, that sounds exciting, maybe even too good to be true, but let's talk about what could actually help it get there. The first thing is institutional investors. When big players, the funds, the institutions start getting in, that changes everything. It brings stability, liquidity, and confidence to a stock. If they start seeing the fundamentals improving, they'll add positions. And when that happens, you get less volatility and a gradual appreciation in price. Next up, product innovation. Opendoor is constantly refining how people buy and sell homes online. They're pushing forward with new tech solutions that make the process smoother, faster, and cheaper. That kind of innovation strengthens the company's fundamentals, and once again, it circles back to that first point. Institutional money follows improvement. Now, here's where things get interesting. Rate cuts. If you've been following the Fed, you know how interest rates affect housing. Lower rates mean easier financing, more buyers, and stronger demand, exactly the environment that benefits companies like Opendoor. As of now, the market's expecting a 25 basis point rate cut at the October 29th meeting. Then another 25 basis points at the December 10th meeting. But if we start seeing weak labor data between now and then, investors could start pricing in a 50 basis point cut, and that would be massive for Opendoor, because that means cheaper mortgages, higher activity, and stronger revenue potential. Now, there's one thing floating around social media that I have to address, and that's stock buybacks. A lot of people are saying Opendoor should buy back its shares. In theory, that would make the stock go up, but let's be real. If a company isn't consistently profitable yet, where's that money coming from? Buybacks only make sense when a company's generating real free cash flow. So maybe one day down the line, but right now it's just wishful thinking. The focus should be on strengthening operations, growing revenue, and setting up for long-term profitability. Now let's talk about shorts, and there are plenty. Roughly 20% of Opendoor's free float is currently shorted. That's about 144 million shares. If the stock pushes past certain key resistance levels and holds, those shorts could start to cover. That alone could push the price up and reduce short interest to around 15 to 17%. That's a healthy, steady move, not a wild squeeze. Because let's be honest, those big short squeezes people hype up online, they're fun to watch, but they never last. It's better to have controlled momentum than a 2-day pump and dump. Technically, Opendoor has been sitting around $8.10. $7.65 is a strong support zone, and you really want to see that hold through the week. The next big resistance level to watch is $10.23. If Opendoor breaks that early in the week, say Monday or Tuesday, that's a strong signal. Because once it clears $10.23, it opens the door, no pun intended, for moves toward $11.27, $12.73, maybe even higher if momentum builds. Those levels also line up with what the Elliott wave pattern is showing, so technicals and sentiment are starting to align. On the other hand, if we fail to break above the 10-day moving average, which right now sits around 819, momentum could fade again. That 10-day average is the line in the sand. Closing above it would mean the bulls are back in control. Failing to do that could send it back down towards support zones, maybe even the pivot levels around 7.5. And remember, Opendoor hasn't consistently closed above that 10-day average since mid-September, so this breakout attempt is important. There's also an interesting psychological aspect to this stock. Opendoor has become one of those names that everyone has an opinion about. Some see it as a meme, others call it a cult stock, and a growing number are starting to treat it like a serious fundamental play. It's all over the place, and that's what makes it fascinating. It's not just a stock anymore, it's a study in market psychology. You've got hype traders, long-term investors, and even institutions starting to pay attention. Now, as for leadership, Kaz and Eric have been showing real energy lately. They're active online, they're building community, and they're giving off that confident, mission-driven vibe that investors love to see. Honestly, it's giving a little bit of Elon Musk energy, but with more focus on the housing market. And that's good because leadership presence builds trust. So here's how I see it. This week might be volatile, but overall the setup looks slightly bullish. If Opendoor holds above 10.23, we could see a strong move higher into the next few sessions. If it fails to break that 10-day average, we might just consolidate a bit longer. But that doesn't mean the story's over. The bigger picture still looks promising, especially if the Fed follows through with rate cuts. Right now, Opendoor is all about momentum, and momentum needs fuel. That fuel comes from catalysts, rate cuts, improving fundamentals, and institutional buying. The pieces are lining up. Now it's about timing. So tell me what you think. Do you see Opendoor pushing above 10 this week, or are we still going sideways for a bit? Drop your thoughts down below. And as always, if you found this breakdown helpful, hit that like button and share it with someone watching the housing sector. This is not financial advice, just my personal take on what's happening in the market. Always do your own research before making any investment decisions. Thanks for watching, and I'll catch you in the next one.